Little Lucky Luke likes lakes. Little Luke likes licking lakes. Mm. Little Lucky Luke likes lakes. Lucky little Luke likes licking lakes. Little Lucky Luke likes lakes. Lucky little Luke likes licking lakes. The next nest will not necessarily be next to nothing. The next nest will not necessarily be next to nothing. Can I cook a proper cup of coffee in a copper coffee cup? That says pot. Good morning, everyone. Good morning, YouTube. Good morning, wherever you might see me. I hope you guys are having a great morning, and I hope you guys are doing everything you can possibly in your power to be successful in this wild trading game. We're progressing every day. We're making progress. We're making progress, and it seems that either you're going to be making money or making progress. Hopefully, doing both. This morning is Monday, May 20. Whoa, 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 whoa. Let's not start the week again. Let's start on Thursday, May 29th, 2025. I am Grady on the charts. And like and subscribe. Like and subscribe to this channel. And wherever you might find me, please go ahead and like and subscribe. All right, let's check this out. Let's check this out. Let's drop down to the news. Let's jump right into the news and let's see what we have to what there is to offer. Yesterday we had FOMC minutes that came out later in the day, and we talked about this. I think I read this to you guys. Um, Same thing. Federal officials assess that the announced tariff increase has been significantly larger and more extensive than anticipated, and noted considerable uncertainty surrounding the directions of trade policy and the magnitude, scope, timing, and duration of its economic effects. Minutes from the May FOMC meeting showed policymakers viewed the uncertainty as unusually high and judged that the downside risks to employment and economic activity, as well as the upside risk to inflation, had increased. Mm. In discussing the outlook for monetary policy, participants agreed that with economic growth and the labor market remaining solid and current policy stance moderately restrictive, the Fed was well positioned to remain patient and await greater clarity on inflation and economic trends. The Federal Reserve kept the funds rate at 4.25% to 4.5% for a third consecutive meeting in May of 2025, in line with expectations. That's from the Federal Reserve. Those are the follow-up. That's the follow-up from yesterday's meeting at the FOMC minutes. Today, we have a GDP growth rate quarter over quarter estimate. The U.S. economy contracted at an annualized rate of 0.2% in quarter one of 2025, a slight improvement from the initial estimate of a 0.3% decline, but still marked the first quarterly GDP contraction in 3 years. The upper revision was driven by a stronger than expected fixed investment, which partially offset weaker consumer spending and a larger than anticipated drag from trade. Imports of goods and services soared 42.6% as businesses and consumers rushed to stockpile goods in anticipation of higher prices following a series of tariff announcements by the Trump administration. Additionally, consumer spending growth slowed to 1.2%, the weaker pace, the weaker pace since Q2 2023, while federal government spending dropped 4.6%, the steepest decline since Q1 of 2022. In contrast, fixed investments rose 7.8%, the strongest gain since mid 2023, and exports increased 2.4%. And that source is the U.S. Bureau of Economic Analysis. And you can find more information like this at tradingeconomics.com. This is not sponsored. I just think that if you want to improve your financial position, it would be a great place to start by improving your financial knowledge. Let's see what we have going on the chart as we jump right into this. Again, today is the third day that I have been paper trading. As you guys know, if you with TopStep or traded in if you traded with TopStep through the Trade of 8 platform, that there are have been some issues going on with that platform for at least the last 2 or 3 days. It hasn't been easy. Excuse me. It hasn't been easy really to deal with it because, as you know, as a trader, consistency on your flow are the things that you really hold on to in order to have your mindset to be um, in the right space for trading, right? And so when you have these types of issues that arise, it's a it's a lot to deal with. It's a lot to deal with. Sometimes it feels as if the people who are supposed to support you are the ones who are actually against you, and it's one of those things that you deal with, and you keep your head up, and you trade your process, and you actually can use this opportunity to take a lot of pressure off yourself because you're not in your combine or you're not in your funded account, and you can take a lot of that pressure off yourself, reset, pull back, get a better look at the lay of the land, and then approach it from a different perspective. Mm, the market is open. Excuse me. The market is open. On the ES, we've run below the prior day high. So we're below the prior day high on the ES already. We haven't quite reached the prior day high on the NASDAQ. We still have a little way to go. The AM session high is represented at this particular level that we just reached. AM high is, excuse me, having a bit of a liquidity issue here. The AM high from yesterday is resting at 21,567.50, right? 567.50. And we're about 20 points from that position right now. We've already run those highs on the ES. We're at the consequent encroachment of the same um 1 hour imbalance that we saw ourselves move up from, move down from yesterday in yesterday's AM session. So we're roughly around the same point we were yesterday in yesterday's AM session. On the ES, however, not on the NASDAQ, but on the ES. So we've just dropped right in. We hit consequent encroachment right at the level where the market opened on the ES. But we're going to slide over to the NASDAQ and see if we'll find that same sentiment. Excuse me. Another small imbalance here on the 15-minute chart. We just noticed that we had a reaction at this level at 21,577.25, 577.75. We've had a bit of a reaction. Hmm. Hmm. So market had an immediate pull to the downside. As soon as the candles open, as soon as the market opened, we had an immediate move to the downside. Um, I'm watching that closely because that's like the day before yesterday we did something similar. However, the day before yesterday we dropped down into the consequent encroachment of the Asian session. Now here we dropped into the consequent encroachment of, wait a minute, 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 wait a minute. What are we looking at? Wait a minute. We're just above prior day high on the NASDAQ. On the ES, we're inside of that. The low of the 15-minute candle on the ES has breached the high of yesterday's Asian session, not last night's, but the prior day Asian session, and we reacted to it, making us kind of bounce back up on the ES a little bit higher. I know we're coming to the end of the month, right? So we're coming into the end of the month, and I'm thinking about the open, high, low, and close for the month of May. Hmm. Yesterday's high could very well be the high of the month. The month could close extremely bullish and flat, right? So I'm not saying that we would, be rejecting this level to move lower, but the end of the month is coming, so we're going to be targeting whatever level that's going to be the last price for the month of May. We are in the process of going to that level. Whether that level is higher or lower than this particular point is the question that we're asking ourselves. Excuse me. We priced out of the Asian session and the London session from last night. Early on in the pre-market, we began to price out of that. So the decline was fairly clear. We traded above the Asian session highs during London. And then after the close of London, we dropped down and we took out the London session low and the Asian session low. Um, there was a slight reprice in that direction. However, it wasn't a very aggressive repricing. It was almost as if we just basically fell from that area with slight pullbacks to the upside, but not much else. That had me concerned, still has me concerned that it's a possibility that here in the opening range, we could have breakaway, right? The high this wick trades up to this. We could break away, having these gaps unfilled, and then begin to fall to the downside. Um, for what reason? What purpose? What's the narrative? Well, the narrative is that we put in the high for May, and there's a tremendous wick on the daily chart that we just created. Mm-mm. And the weekly gap that we had yesterday, we're right back to consequent encroachment of that weekly gap. Sitting on my arm like this doesn't seem like it should hurt, but I'm really leaning into this thing. Sitting right here at consequent encroachment of that level. We traded to it. We moved away from it. Now we're back to it. I'm looking at the 5 minute chart. And these two unbroken candles immediately off the open. My eye is here first, and the reason is because of the Asian session and the London session, the New York high. We just reached the New York high. That's yesterday's AM session high we just touched on the Nasdaq, bringing us into alignment with the ES. ES is we have not made consequent encroachment of the AM session from yesterday on the ES, but we have just breached the high of the London New York session, the AM session yesterday. So this is the AM session high. Up next will be the PM session high, and after that, the it says PM session high from the prior day. So I'll pull that back. As a matter of fact, I will take this and I will move this to the PM session high here. And I'm thinking of, in my mind, I'm creating this scenario of a very good trade off of this retracement back into the range. Also, I'm thinking of what that particular move, and I cannot remember the name of it, but you know the one I'm talking about. You know the one I'm talking about. What am I describing? If you have you ever seen a price break out of a range, right? We hit the low, we consolidate, we push to the upside, and then as we break out the range, there's this retracement. Like there's a retracement. It's quick. It's low liquidity. It just runs and falls directly. It falls or runs directly to an order block, and then in that same candle, it just it just reverses in the same candle. Not V-shaped. It just touches a level, and then after it touches it one time, normally it's an order block high or some type of a lower time frame order block, and then it just begins to rise immediately from that point. That's what I had in mind this morning. However, I had imagined that we would trade up, but it just seems as we just began to fade, right? We just began to fade, 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 and in the pre-market we just pop up and we hit this up close candle, and then we just right, we're just falling, right? But this is a 15-minute candle. This is what it looks like on the one. And normally, as I will right now, I am watching to see what price does. Oh, excuse me. To see what price does in these areas. I am not changing my rules. Wait, I'm changing my rules, but I'm not changing my rules on the fly. Excuse me. And what I mean by that is I wanted to I want to really understand, for me, and I guess you guys, and I say this in a way that opens up sort of questions about um my commitment to the thought that I'm having. But that's neither here nor there. What I'm really saying is when I look at my trading, I don't want to have rules that are so rigid that I can't understand what I'm looking at because I'll just completely deny it because I'm just screaming in my own head. I'm following my rules. I'm following my rules. I think that that's too short-sighted, right? That's too short-sighted in a view of what's actually transpiring. What I do want is when I'm interacting with the levels that I think are significant, I would like the freedom, that's right, to um analyze price with clarity. And I struggled to say that. I struggled to say that. That was crazy. Mm-hmm. I. And I think the reason that I have a issue or I'm struggling to say that is because even as I'm saying it, I am measuring my statement against my trading plan. Right? It's like, okay, does my trading plan allow for me to take particular entries? Well, my trading plan is focused on uh, prior day high and low, prior day. You see how I pointed with my finger. Um, and I'm noticing how we traded below this level, which is the AM session high. Then we retraced just almost to Asia session high, and then we dropped down. And I'm watching the clock. It's 9:44 a.m. And I also am trying to be mindful of the 10 a.m. price. Now, first thing I thought when I saw that was what? The first thing I thought was, where's yesterday's first presentation or PM session first presentation? That's the first thing I thought. And I know I don't have it on my screen. So what I'll do is while I'm watching this over here, I'm gonna pull up another chart on this other screen. And I want to find it, but I also want to keep my eye on this. So I am this red level is the PM session high. But Grady, price is just falling. Yes, I know. Calm, be calm, be calm, calm down. Okay, so I was using this yesterday as a mean threshold, right? Mean threshold of an up close candle to see whether or not it would reject price. That's what I used yesterday. However, As I'm looking at that level today, and I'm looking at the opening price, it seems that there was an imbalance here that represented the first presented gap yesterday. Now I'm going to a lower time frame to see whether or not that level holds up to scrutiny. It doesn't. In the 5 minute, it was an imbalance. On the lower time frame, it isn't. I see overlapping wicks and no bodies. I see how in the PM session we trade back to this level and we utilize it as the first presented. I think I do like it. So now do I see price interacting with this level again? We're very close to it. And it's coming up. It's roughly 21,508. 21,508. So only thing I'm watching for is how do we react? How do we respond to it? Is it to and through? Is it consequent encroachment? Like what are we actually doing with this price and this price point? So put that back over there. I'll swap this to 15. I'm gonna move this to 1. That's consequent encroachment. It's a very precise representation of consequent encroachment of that gap that we saw that was represented at the first presented gap yesterday. This level is consequent encroachment of that gap. Immediate rejection. 12 minutes into this 15-minute candle. 2 minutes left in this 5. And I am just watching. And I am just watching. 9:48 a.m. The macro is going to begin momentarily. There's a minute and 50 something seconds left in this 5-minute candle. Here is the high of that 5-minute candle. And I just wanted to watch the high of the 5-minute candle because as we cross this level, we immediately create a bullish candle. And if we create a bullish candle in this scenario, then I just wanted to see exactly where it forms or how it forms. We are re-entering that imbalance on again. That we're back at consequent encroachment, to and through. That's to and through. Okay. Okay. You have two consecutive imbalances on the 15-minute chart. One with the high beginning of 21,486, and then the next one that's the midnight open for Thursday at 21,443. On the daily chart, this candle just turned bullish. On the daily chart, this is now a bullish candle. Sorry, yes. I need a monthly chart. Where can I pull up a monthly chart? Where can I pull up a monthly chart? 1 month. On the monthly chart, the high of this candle slightly ran above the high of closing price in January. So yeah. So either this month or next month, we're looking to see whether or not we can break above that closing price on January to see if we will be able to make, create, and hold new highs. Yeah. Okay. We are near at below consequent encroachment of the AM session yesterday. We're also below the high of the PM and the lunch rate. But we are in line with the consequent encroachment of yesterday's London session. on the ES. Where does that put us on the NASDAQ? Come on, baby. Show me. Show me. Show me. Where are you? What are we looking at? Look forward. Right. Oh man, we are right at the high of the Asian session. If we begin to fall down through these levels, then we are much more bearish than I thought, if that's the case. If not, then this could just be a very good place to um let's see. Okay, we're back above that imbalance that we were looking at 2 seconds ago. Hmm. Okay. Now we're back above prior down close 2 minute candle. We see this imbalance right here, right? We just came into very close proximity to that Asian high below all of those other levels. Now, according to my trading plan, this is very close to what I want to trade. According to my trading plan, that we're going to come into very close proximity to the Asian session high. We're going to touch that level, and then we're going to pop up. What I need to wait for now is confirmation. I need to wait for confirmation. I'm only looking at the 1 minute time frame. It's 9:52, right? 9:52. Now, the significance of that is ba-ba-da-ba-ba. We're going to swap and we're going to go to a new hour in just a moment here. Now, I don't want to front run, right? I don't want to get ahead of the market. I don't want to get ahead of the market. I don't want to, um, yes, I just don't want to get ahead of the market. Now, with Grady, what if you get left behind? Let's see how we moved above that and drop back in, hit that level. Grady, what if you get left behind? Right? Because I'm not exactly looking for 10 a.m. I'm really looking for near 10 a.m. Grady, you get your stuff together, buddy. Get your stuff together, buddy. Okay, 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 okay. This is what I would prefer to see. I would prefer to see this as an inversion gap. That we run up, we reject this, drop down below this, trade up above it, and then trade back to it, then trade away. That's what I would prefer. For me, watching a 5 minute candle. Why am I watching 5 minute candle? Because of this, I'm looking for an inversion in this area. Breakaway, trade above this, trade back down, and then trade away. On the 5 minute, actually. Actually. Mm-hmm. Hmm. 5 minutes to the close of the hour. Would never put that much risk on. Not willingly. Paper trading, I'm like, yeah, yeah, I'll go for it, buddy. See, this is what I was referring to. How we're back above that consequent encroachment of that area. And this is a lovely pullback as well. However, the new hour is about to begin in 4 minutes. And what I want to see is I would like to see the close of the hour and the close of the 15-minute candle. Where this 15-minute candle closes and where the next hourly candle closes. So below 21,526 to the low of this current candle is the area that I'm watching for. Now, will I get that? Will I get that or will price, all right, it just triggered us in. Or will price drop down somewhere lower into this down close candle? Stop me out. There we go. Yep, stop me out. Bop, bop, ba, da, bop, 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 bow, Nickelodeon. Do 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 do. Shooby dooby doop doop. Mm-hmm. 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 What did you just do? You see how quickly I took that trade? And did you see that we did not complete the hour yet? But I took it immediately? Okay, that's a bad habit. That's a bad habit. That was a rapid fire trade. And I'm taking notes here. Rapid fire trading at 0.5 0.95830. Two trades. One. Again, what I verbally described as premature. Then the second one was rapid fire. That's FOMO. That's straight FOMO. That's FOMO. Because I believe that now that we're very near the Asian session high, and we had this sort of reaction to it and the pullback from it. I'm probably am misinterpreting it, right? Because it could be one of those opportunities for us to get close to that level, pull back from it before we move through it, right? Sometimes we'll see that, right? We're going to a particular level, and if we're going to penetrate the level, before we do so, we pull back, then we move through the range or through that level. Now, all I need to do now is wait 30 seconds. I'm waiting 30 seconds because at 10 a.m. I'm looking for an entry at 10 a.m. Mm, 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 mm. Not at 10 a.m. Not at 10 a.m. I'm wait until 10 a.m. to begin looking for an entry. Okay. Okay. Couldn't wait 30 minutes, buddy? Huh? Couldn't wait 30 minutes? And it seems as if, oh yeah, no, but but those types of trades really hurt. Those trades really hurt. Okay. Let's see if this hourly candle runs the low. Here's the low. Below that low is the Asian session high from um today's Thursday, from Tuesday. Tuesday's morning's Asian session high. And the significance on the 15-minute chart is we would be running the liquidity out below um below 21,045.75. So we're looking to see would we run the liquidity out, liquidity, liquidity, liquidity out below that level, or we're just in a continuation, right? We're just trending to the downside. It's either one of those two things. And I have a notorious issue of not being able to recognize trending days. Like if price starts to trend in a particular direction, I do know that I'm notorious for not being able to identify that. It'll be 2 p.m. and I say I think this market's still going to the market's about to reverse. I really think the market is going to reverse any second now, right? Dude, the day is almost over and then it finally reversed. I told you. Yeah, but we moved 1,500 points. Oh, yeah, but we didn't take that low out. I don't really necessarily like that. I did kind of want to see us run it and then run it again and then reverse. Mm-hmm. 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 43 seconds. That's all I need. 43 seconds. That's interesting. Mm-hmm. 100 TP. Where did I put my stop loss? I thought I put my stop loss down here somewhere. 240. You do 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 dee do dee do. That stop loss isn't on the 1 minute chart, isn't even the candle. Dang it, I couldn't even get it there yet. I couldn't even get it. I was like, man, this stop loss isn't even below the 1 minute candle. It's on the 15-second chart below a 15-second candle. That's bad stop placement. I'm not saying that I wouldn't have been stopped out here, but this is at least below this low, right? And some people would probably say, no, well, it should have been below this low, actually. But then that means that my entry should not have been in the inversion of this gap. My entry should have been down here. However, the high of this wick is inside this imbalance, and then we turn down when we drop down. So that's I am trading a strategy, and the strategy that I am looking at is the movement from this pre-market's Asian London session to the prior Asian London session, and then final liquidity at the prior day levels for movement back into the previous direction. Now, do you see how and why it could possibly fail? Well, these two trades here had nothing to do with they did, right? Because if we look at the Wednesday, what day was that? Monday, Tuesday. Tuesday, Tuesday, as soon as we touched the Asian session consequent encroachment, we took off like a rocket. And that happened like 9:40, 9:50. It was before 10 a.m. Um, but I don't mind that. I think that first trade was good risk assessment, right? You know, putting something out there to see whether or not that was right or wrong. But I think that the problem is that I immediately re-entered. Like, and instead of me assessing what it all meant or how that could possibly be wrong or how we just traded to the high in this candle trades to the low of this up close wick, right? Past this imbalance and then we turn up and pop right into this gap and then sell off, you know? Because again, remember, we could be trending to the downside all day today. And then tomorrow closing out the month, we could just rise back up into a decent level to close the month out flat or bullish or whatever, right? Because I couldn't imagine that this whole month would be a big bearish month. Oh, no, no, we're nowhere near being bearish on the month. Day, definitely. So far on the day, yes, extremely bearish. We're below consequent encroachment of yesterday's Asian session. We're approaching the Asian session low. That's in alignment with the consequent encroachment of yesterday's London session. So that's a powerful area that we're going to see we're going to see what happens at that point. 10 a.m. we broke loose to the downside to run for that low level. Now the risk on this paper trading account is significantly higher than anything that I would really want to tolerate in my combine. It really is. But this is all me, right? All of the stuff that I did right here, that's really all me. Like all of that, that's really all me. These weird little interactions in this level, looking for some type of a trade off of this down close candle to the upside or trade off of this gap in reversal to the upside. Yeah, I mean it was decent. However, if I'm going long, I'm too high in the range to really get long, right? We're down below consequent encroachment of the London session from yesterday. We just took the London session lows. I love it. I love it. No, the thing I'm laughing at is I was right about everything. No, let's not put that out there. Doesn't sound true. In my pre-market analysis, this is what I suspected could be possible, that we would just have this type of a sell-off because of the way we broke down between from the Asian session and the London session. I expected a move to the upside prior to the move to the downside. That's what I didn't get. I really was wanting to see a rise to lows or the discount of Asia or London and then a move to the downside. But it just wasn't a part of today's price action. Hmm. Price just closed on the London session low. Let's see if we go down through it. Crazy. Hmm. Hmm. 13 seconds. I'm not sure. I like this area. And I really, because we closed like right on the London session low, that has my attention. And I'm like, this up close candle is the thing that I want to see. And then I want to see whether or not we can get past 21,438. That would be encouraging to me. Just watching the 15-second chart. Ooh, ooh, ooh. So that's two movements back inside of London. Two movements bend back in this direction. Ay, 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 ay. Two movements. Yeah. The low of this candle is the London session low. Now we're through it. We traded all the way through that level and then out the bottom. Mm. Mm. This is lunch low. What I mean by that is this is the lunch raid low from Tuesday. Excuse me. London session. Are we going back inside of London session? If we are, then I would be extremely tempted to get long. If we are. But it's just a retracement back to the London session low, putting one little touch to the London session low right here. So you can see that these lows and that high are all sharing the same plane. Yeah. Hey, but for us in the trading circles, when we say sharing the same plane, we're talking about something else, aren't we? Right? Am I right? Whenever I say, man, I don't want to get short because I'm not sure how much downside there's left on a trade, normally that means that we're at the middle of the range. My personal experience. Like, I don't know. I would get short, but I'm not sure how much there is left in this trade. Nope. Nope, no, that's the middle, buddy. We're inside London session again. Just inside of the low. Sorry. Mm-hmm. A little higher in the range. That's enough. Um, this is a I'm not gonna lie, this is a gamble. We're a consequent encroachment of the London session. Will London session consequent encroachment reject price, sending it back down below the lows of the London session, even at this point of the day? We're above consequent encroachment of the London session from Tuesday's London session. No, 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 that's Wednesday's London session. We're above it. I am paper trading, right? I am paper trading. There's no, there's no blah 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 about that. We're in the 50% range of the premium of that London session. So yeah, I want to see us take the high. The high of that London session is here at 21,467, 460, 460, 461. Ones and sevens are shaped the same, but for all you kids in the kindergarten, you preschoolers, let me explain to you the difference between a one and a seven. I mean, it may take you a few years to identify the difference, but the seven has the big arm. The one has the little one. Select the string here. Am I back? Am I back? Yes, yes, I'm back. Yep, I'm back. Okay. Well, we had a power outage on a beautiful, clear day, and yeah, it's just a strange power outage. And I think that I'm like the only person awake in the house. We're not washing clothes. We're not doing anything. It's just the lights flickered and flashed. And as you know, if you take a look at any of my streams over the past few weeks, this is new, right? This is something that's just happened in the uh last 2 or 3 uh days or so, where we've been having these sort of random outages. All right, having these random outages. Now we have to figure out, whoa, what to do about it. Have to figure out what to do. So I think I've taken 3 or 4 trades, and even this last one, even the last trade I was on here, I was stopped out. I was stopped out. I was unable to even bring my stop loss to break even because I wasn't on the screen. It just we went above it, hit the level, we dropped down there, and it took me out. So yeah, that's that. That's that. That's how that went. So yep, crazy, right? Um, I'm watching Price. Extremely distracted by that. That was an extreme distraction. And I see now that I'm gonna have to completely, the only thing that I really, really need to do, and I'm gonna do that today, is I need to back up my Wi-Fi. That's the only thing I really need to do. If the power flashes, that's not a problem, right? If my Wi-Fi goes out, then there's a problem, right? Because it takes so long for that system to reinitialize. And because of that, then I'm sitting here waiting and looking and watching, trying to figure out, you know, what to do next. Trying to figure out what to do. But Grady, didn't you just? I did. Um, I just took a short looking at these wicks. Mean that price is going to move to the upside? It does not. It does not mean that at all. It means that I'm paper trading, and right now I am testing out entries, and and I took a trade like this the other day. I took a trade like this the other day, and what was different about it was what? Um, we priced through the Asian session, and I'll bring this chart over so you can see what I'm describing to you. But we priced through the Asian session, and this is kind of how it looked the other day. Um, so this green area represents the London session that we're currently trading, which is from yesterday morning's London session. So we dropped down through the London session. We popped right back to the consequent encroachment of the London session, put a wick into the premium, rolled over, dropped down. Then we put a wick back to the low of the London session. Immediately, what do you think I do? Right? You think I get short? Nah, not really. I don't. And the reason that I don't is because I would think that I would get short here. All right. I would think that this is a logical shorting area. All right. So we have the Asian session low. We traded up to that pre-market, then we dropped down, trade up to this up close candle pre-market, and then we move to the downside. Getting short in this range of the market to me makes more sense. Getting long, or getting short as we trade down and take liquidity out above or below most of these sessions, it just I couldn't do it if I wanted to. Even if I looked at it the next day and we were down here at at lunch and we're down here, right? Even if we're down here at lunch, between now and 11 and we end up down here, to me it would just be more logical to say, "Oh yeah, Asian session, London session. Oh, boom, off the London session high. Oh, look, London session consequent encroachment. Oh, look, retracement of London session high and then move higher." Right? I'm not interpreting higher time frame market structure shift on the hour, right? I'm not interpreting that as such. I see that on the hourly candle, we dropped down into London session and then ran into these down close candles. This is the lowest down close candle in this range. We got very close to its opening price and then sort of moved back into London session. So I'm really looking for us to move back above the consequent encroachment of that and possibly move higher. That's my logic. And that's what has me taking all of these long trades at these particular points. Here on the hour, we moved down to the Asian session high, and then we popped right back up. What was the problem with my entries? It was before 10 a.m., right? It was before that first 30 minutes had transpired, allowing us to see what was going to happen. Um, so yeah, so that's the logic that I was utilized today that had me saying, "Oh, okay, yeah, London session low, London session low. Oh, yeah, 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 Asian session low." Now we're back at the Asian session low, right? Now we're back at, and I say Asian, yeah, which is also the consequent encroachment of the London session. So these are the areas that I was targeting that had me so eager and gung ho to jump into the trade. Except, it's what was this? What's happening? I hit my TP. Oh wow, I hit my TP, and I wasn't even looking. The one trade I was successful with today, I didn't even record. I didn't even watch it. But that was the idea. Now that we're above the consequent encroachment of the London session, as you just saw, price now is moving back toward the high of the London session. We have this imbalance here, and what we would watch to see is whether or not the high of the London session, which is 21,462, would even hold. So my last entry was here at 21,410. A little bit of drawdown on that, and then I exited the trade here at 21,448. And I think it was 2R, right? So I risked like $300, and my reward was 700. But because we're at the low of this overall range and we're leaving the London session, to me, this could possibly be the beginning of a nice little move to the upside if it holds, right? Because this could be the 50% of the range. And if we're at the middle of the range, then that means that we would have the distance that we just traveled from the pre-market to this point, we would have that much to travel and more in order to get to the completion of today's range. But that's pretty much all I have to say about that as price continues higher. And that's one of the things that I really want. I'm glad that we can look at with paper trading. All right. This is what I really am glad that we can look at with paper trading. Because what? Because what? Because I can really take notes about the stupid stuff that I did this today and really be like, that was just dumb. That was dumb. That was stupid. But it was all within the confines of my analysis pattern, which is I'm looking for yesterday's session, today's session. I'm looking at the high, the consequent encroachment, the low, and I'm looking for reversals at these significant areas. We're at the high of that London session. This would be an ideal exit point as far as an entry from the London session low or areas below that. There wasn't another area, which was yesterday's PM session. Yesterday's PM session. No, no, no. Lunch. No, 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 no. Yesterday's. No, that was Tuesdays. 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 I should write this stuff down somewhere, right? But that is Tuesday's lunch rate low, which is this purple area. That purple area is Tuesday's lunch rate low. We touched it. There's one, two, three, four entry opportunities below this low. Am I there yet? Right? Am I there yet? Right? Am I there yet? No. No, I'm not there yet. Right? I'm not there yet. But I want to get there. That's where we want to get. Now, what we're seeing is we're touched the London session high. The entry would be here below that area. This is below of the lunch trade from Tuesday's trading intraday. From that area to that area, one mini is $1,200. That was $1,200. And on the trade that I was able to get in here from here to there was 750. And why am I saying that? Right? Why am I saying that? What I'm saying is these trades aren't these trades aren't they aren't much something to laugh at, right? They're significant. They're making significant moves in that regard. So that's what I was saying. Is that they're doing things. They are doing things. What do I think? All right, sorry about that. I just had to handle a quick little business. And I thank you all for joining us today here on Grady on the Charts. Please like and subscribe. Please like and subscribe. And I know that in this trading space, what we like to see is we like to see people come into the market and abuse it, right? We like to see people come into the market and take the bull by the horns and take the bear by the claws. Is that right? By the fangs, maybe, and have their way with the markets. And I know that that's a very popular way for people to interpret what trading is all about. But my channel, what I really wanted to show, or I really wanted people to see, is the day-to-day struggles that people have in their initial introduction to the market, and in the way that they you know, go through the real process. And it's hard to do that publicly. And it's hard to do that with all of our feelings and emotions and all of the things that we go through. And that's a part of it, though, that we're all going to have that. We're all going to have a real life while we have this trading life. And I think that sometimes we think that it's going to be some type of a AI generated beautiful scene that we could live in and have everything perfect for us. But this is a job and a business, and it doesn't, and that's how that's how we operate, right? Like professionals. Um, According to the way I've been trading recently, I think my boss would have sat me down and we would have had a coaching by now, because this is ridiculous. And I don't mean ridiculous as bad. I mean it's just I really we have to get it together. You have to get it together. I have to get it together. and we have to take care of business, right? We have to take care of business. So thank you guys. Like and subscribe. I'm back tomorrow for more of this wonderful trading activity. We have a short week this week. But be careful in the markets, right? Be responsible for your own trading activity and for your own account. Understand that everybody has to trade their own book and be responsible for the money that they earn or lose in trading. And so we'll see you again tomorrow. Bye bye.